Hi traders, welcome to the video. Please pause the video and make sure you understand the disclaimer before proceeding. Hi traders, Anthony here. In this video I want to show you how we can have an incredible edge in the market. This is trading or day trading the Aussie dollar paired with the US dollar. Before I get into the video, I'm going to quickly show you something. Let's say you have a $5,000 account and you achieve a 10% gain. Providing you leave the gains within the account and you don't withdraw any funds, within 12 months, the figures start to look really interesting. And of course in 24 months, so this is compounding growth. And it gets more interesting if you have a $50,000 account. Look at this. That's an income. So is this possible? Let me show you this. This is my master account that I started 8 months ago, and it's available for a trade copy. We can connect your Forex account to ours. We've achieved 136% growth in the 8 months. We doubled the account in 6 months, and over that time we've averaged it out at about 10.9% per month. If this is of interest, the link is below. You can head over to my website and click on the We Trade Your Forex account link, and all the information is in here. When it comes to the broker, I recommend 200 to 1 leverage. We've only really ever pushed the account to around 20 to 1. I would say 100 to 1 would be minimum, but make sure there's plenty of room to move. Our fees are a profit share arrangement, and all the details can be found on the website. For now, let's go back to the chart, and we're going to look at what I sent to our Telegram group yesterday, Aussie dollar idea. This was it here. So let's check that out. I actually left out these two things here. Here's the thing. This was the idea. It had pulled back into this level. The idea was short. There's a 4-hour order block, and I just said, here's an Aussie dollar idea. This is the window of opportunity through this range here. Let me explain how I trade. In fact, we'll go back over here and we'll have a look at this. See how we had this pullback here? When I spot the opportunity, I'll go in with a market sell so that I've got a small position in here. See this 0.2% entry at market. But what I'll do is I'm going to look for the green candles prior to the move. Well, we've got this candle here, and decided to place my stop loss above that. Here's my second entry right through here. Stop above. This is a limit sell. So all of my trade, I'm going to get involved with a market and a limit order. So I'm going with position size being a percentage of the account, not so much looking at lot sizes per se. So this is generally how I'm trading. So I've got this downtrend. There's the opportunity. So coming back over here, it's no different with this. This is the opportunity. This is the window of opportunity in here. Okay, I'm just going to show you this. What I'm always looking for is a 4-hour order block. Now we've got one forming here. If price moves up into here, that could possibly be a sell opportunity. But let's just not get too far ahead of ourselves. Coming back over here, look at this. I'm looking for a trend. It's the downtrend in this case. It's clear. We've got lower highs, lower lows, break of structure to the downside, low, lower low, another break of structure here. So this is a valid trend on the 4-hour. I'm looking for the pullback up into this order block for the opportunity. Now the window of opportunity is always going to be, like I saw this lower high here, my window of opportunity is generally going to be this, sell zone. And the sell zone, see this order block, it's at the base of this order block, 4-hour. We've got this price gap. See this candle here, thin candle. Look left, grab the low. Look right, grab the high. All right, so we've got this 4-hour imbalance sitting here. Mark it up, price gap if you want. And I'm looking for the opportunity. Get short here with a small position, fine. But ideally, the market's going to look to rebalance and it's going to hunt liquidity. So it didn't in this case, but be careful, okay? Because at some stage it's going to look to fill this gap. So I'll go in with a market here, and then I'm going to set up a limit order up in here, because more often than not, I mean, here it is here, look. There's your order block. Yeah. Trades down, spikes back up into it. It actually wicked through that one, took out some stops. Vicious. Most cases, when you're looking at a trend, and look, this is actually a bullish trend here, even though it looks bearish. Why? Because we've got higher highs, higher lows, and here's the thing: be careful, because it looks like it's wanting to reverse here. And, you know, I mean, look, I don't want to get too carried away, but given now that we've got this break of structure low, that's not going to be an entry long, so I just leave that alone. What I'm looking for is a clean trend, something like, well, we've got that right here. Just to paint a bit of a picture here, look, green candle, prior to that we've got this red candle, prior to this bullish move, I mean. What do we got? We've got a break of structure, trades up, we've got this break of structure, bullish, we've got a red candle. I'm looking for the opportunity back in this zone here. Where's the next break of structure? In through here, let's just call that. Ideally, I want my entry around here. There's the last red candle prior to this move. I would have preferred, you know, a move back down in here to get involved. But what you can do is go in with a market, buy, small position, and then set up a larger position further south, closer to this order block. All my trades are going to revolve around 4-hour order blocks. See this red candle here? Pull it across. Look at this. There's the pull back down in. So that's the entry here, long. I'm always looking for these accumulation distribution levels, zones. So it's the same thing with this, right? This is yesterday's trade. Downtrend, mark up your thing. There's your green candle up here. There, right here, prior to this. We've got a gap here, an imbalance, so half expect that to travel up through there. So that's why I always go in with a market, get my feet wet in case it rolls over, and then you got a larger position set up in here. And as I mentioned earlier, it doesn't take much. Once this is hit and this trades south, it doesn't take long for this to be in the money. So we've got 4-hour order block. See this here? This is a weekly resistance level. It's right here. This orange line. We've got the red dots. 4-hour order block. Stop loss above. That's ideal. And can this push through and trade? Yes, it can. But more often than not, these are going to pay. I want to show you this. Let's go out of here. So here's the thing. Look. We can see the markups from the 4-hour. This orange is that 4-hour distribution level. This line is the weekly resistance. This yellow line is a daily resistance. So like this zone in here, 4-hour order block, look how strong that is. That's a really good level, strong level of resistance. So what I do is I'll go in with a market. By the way, look, we've got a bearish signal here. I will go in with a market so that we get our feet wet, but just in case this happens to wiggle around and trade back up, then we get another fill up here. It didn't do that, but keep in mind, as I mentioned, see this purple zone through here? This is an imbalance that is going to get filled at some stage. The market looks to rebalance. That's why I set up a market and a limit order. All right, so here's the thing. Bearish signal. Show you how powerful our indicators are. The opportunities we get here. This is just, it's gold. This is absolute gold. Look through here. Let's just take it from back there. Look at this zone through here. What I'm waiting for is this bar. This is what brings me into the chart. Now, I changed the wording on the label from buy and sell to bearish and bullish, because I don't want people getting confused thinking, oh, it's a buy signal, right, we buy. No, it's not. This is telling us that on the 4-hour and on the daily, it's favorable. The momentum is favorable, bearish, right here. So when we see this fire, in fact, we're setting up these signals. Let's have a look. Look at all these opportunities. This is the alerts log. These are all the signals that are going off. These are trade opportunities similar to this. When this fires, I'm going to come into the chart. The first thing I'm going to look at, here's my, I don't know how many step process, right? First thing is I'll look at the 4-hour. Is it favorable? Yes, it's a downtrend, higher, lower lows, whatever. It's favorable, it's trending down. There's my order block. There's the opportunity. So that's my first port of call. The second thing is I will have a look at the 30-minute, and I want to see this indicator down here. This is our multi-time frame. I want to see 3 out of 5 red. We got it. Okay, checkbox number whatever ticked. Then I want to see this thing in a downtrend, preferably under the cloud, bearish. Not so in this case. So, you know, it's a matter of weighing up the pros and cons and building an argument. So, you know, the strength of the argument weakens a little bit, given that this is trending up quite strongly here on the 30. Okay, fair enough. It's still an argument, but not as strong as I would like it to be. That's fine. Generally, when we get a confluence with the 4 hour and the 30, and they're both trending under the cloud like this, it's pretty high probability. So I can see the situation. We've got room to move. This trades back up in here. Okay, order block, etc. I'm okay with that. Right? I can see this yellow line daily resistance right through here. I can see the red dots. So there's a level of resistance through here. It could trade through. Let's go in with a market and a limit. So then, next port of call is I'll go down to my lower time frame. In fact, I mean, it's this signal that brought me to the chart. Signal fires, okay, click on it, come into the chart. Right, we got a signal. Look at it from this 3 chart perspective, right? Come back. Then, this is what I was getting at before. What have we got around this signal in this bar here? We've got a red dot, a red triangle, another red dot. This red line here is a divergence. It's a bearish divergence. Whenever you see a combo of a red dot, a bearish divergence, and a red triangle, it's generally going to be an opportunity. All right, especially when we've got this bearish signal here with all of that preceding it. So that's your entry short. Nice little pullback up in here in case it spikes through at some stage. There's your limit order. So, you know, I mean, this is an opportunity. And look at all these signals going off. But just quickly, here's a sneak preview. I actually went through and traded every single one of these that fired, and this is the outcome. And I didn't bother doing any technical analysis. I just blindly traded the signal as it fired. I would say if you're going to try that, do it on your demo account, see how successful it is. And if you ever trade a live account with this, start off with very small lot sizes. Anyway, I mean, you get the picture. This is just trading every signal plus. Okay, there's a story behind these other ones here. I'm going to do a video on this. So, bottom line, I just clicked on the alerts and I just started from the top and just took every trade at the exact point of the signal fired. So next video will be that video. Okay guys, with that, jump on board. Hope you have a great day. Safe trading. See you in the next one.